Hello everyone, welcome to Free Learning School. I have started a new series where I will be discussing about the different terms of accounting. Today's topic is what is the ability to pay principal. Ability to pay principal is the concept that individuals should not be required to pay taxes beyond their withdrawal to pay the taxes. In other words, it's a concept that determines the proportional amount of tax levied on an individual based on his or her income and capability affording the taxes. This principle seeks to impose a higher tax on people with a higher income and a lower tax on people with a lower income. This way, lower income people aren't taxed excessive amounts relative to their overall income. This is the fundamental principle in the progressive tax system of the United States, which seeks income redistribution. The amount of money spent by wealthy consumers is higher than their basic necessities. Conversely, the amount of money spent by lower income consumers is lower than their basic necessities. With this concept, the lower income people can meet their tax obligations because they are lower than those of higher income people. This concept also extends beyond simple tax brackets and income level. For instance, individuals should not be taxed on transactions in which they don't receive any cash. An example of this is stock options. An employee who is granted stock options receives something of value that is subject to taxation. But because they didn't receive any cash, they can delay the tax on the options until they cash. Now, if we talk about a real example, it will be much more clear to us. For example, Bob works as a waiter at a fine dining restaurant and earns an annual income of $36,800. Nancy is a chief financial analyst with an annual income of $225K. The government seeks to raise the tax rates in order to collect money towards lowering government debt. On the other hand, the progressive tax system requires higher tax rates on people like Nancy and lower tax rates on people like Bob. Bob and Nancy belong to different tax brackets. Bob belongs to 15% tax bracket for an income between 37,650 and 91,150, and Nancy belongs to 33% tax bracket for an income between 190,150 and 413,350. With the introduction of the ability to pay principle, Nancy, who earns more than $75,000 annually, will pay 100% of the taxes, which is 33% of 225K. The amount is 74,250. So she has to pay the full amount as she earning 225K, which is more than 75K annually. Bob earns less than 75,000 annually, will pay 25% of the tax amount. So Bob was on under 15% tax bracket. If we calculate that, the amount become 5,520. But government declared the cap is 75,000. So Bob's income was $36,800, which is lower than 75,000. So he will pay 25% of the tax amount, which is 1,380. Although the ability to pay principal makes sense, there are arguments against, mainly because it is difficult to accurately determine a person's ability to pay taxes. Furthermore, the government imposes a tax on the income earned, not on the marginal utility of each consumer. So if we summarize the whole thing, we can say the wherewithal to pay concept is a taxation principle that suggests people shouldn't be subjected to taxes that they aren't able to pay based on their income. I hope you liked the video. Please subscribe to my channel and don't forget to hit the bell icon. Thank you.